Good morning, students. Welcome to lesson 60. In this lesson and in the next 11 lessons, I will explain non-profit organizations. All right, so from lesson 60 to lesson 71, I will cover non-profit organizations. All right. Okay, let's start with the introduction. What is a non-profit organization? You know, up to now we have learned how to do the entries or do accounting for profit organizations, for trading concerns. Now, the main purpose of a trading concern is for a business to make a profit. Non-profit businesses or non-profit organizations are established to provide their members with a special service, like in the case of sports clubs, cultural clubs, recreation clubs, you get bridge clubs, doll clubs, etc. The income generated from the activities of a sports club is normally for the extension and improvement of the club's existing amenities so that all members may benefit from it. The main aim of a non-profit organization is not to purchase and sell, but to promote the interests of the community or a specific group of people. The recording of transactions of such an organization is similar to that of a trading business, but because there are fewer transactions, not all the subsidiary journals will be opened. The subsidiary journals that we will most widely use will be the cash book, the general journal, and then sometimes a petty cash book. We're not going to open a debtors journal, cash receipts journal, cash payments journal, all those journals that we've entered for a trading concern, because obviously there will be less transactions for a non-profit organization. All right. Okay, a non-profit organization can either be in a form of a non-profit company, but don't worry about that. I'm just giving that for background. It can be a non-profit company where there will be specific rules and regulations. It can be in a form of a trust, or it can be a voluntary association. All right. In this module or in these lessons, we will more work with a voluntary association. The reason why I'm saying that is because a non-profit company, for example, or a non-profit or a trust, there are more strict requirements for the books of, say, a non-profit company or a trust. Okay, so we will be doing a books of a normal, like a club, a sports club, and it will be the form of ownership, to put it that way, will be a voluntary association. Okay. Okay, so what are the characteristics of non-profit organizations? Okay, the most important one is that it is not established to make a profit. The purpose of the non-profit organization is not to make a profit. And the income, because they don't, like in a trading business, buy and sell goods, the income mainly consists of membership fees, donations, legacies, and then income from functions and interest earned from the investment of accumulated funds. Okay, I'm quickly going to go through a few terms that we are going to use in non-profit organizations, terms that we haven't used in the trading concerns that we've done like up to now. Okay. The first one is that in a trading business or a trading concern, we will use the term profit or loss. In a non-profit organization, we don't use the term profit, but we use the term surplus. And a loss, we don't use the term loss, we use the term deficit. So we are either going to make a surplus or a deficit. Hopefully, it will be a surplus. In these lessons, I will make use of the term club or sports club, and that will then just refer to all the businesses that are non-profit businesses. So just to keep it simple, I will use the term club or sports club. Okay, but that actually refer to all types of clubs or associations that are voluntary associations. As I've said to you, the books of a non-profit company, there are other requirements regarding the books or to do the accounting entries for non-profit companies and for trusts. Okay, but we're going to do the books of non-voluntary associations or do the books of that, and I'm just going to I'm going to use the term club for that. In a club, there is not a capital account like in a trading business where the owner's account is called the capital account. The club that is similar, or the account, that is similar to the capital account is called an accumulated fund account. So the accumulated fund account replaces the capital account. The other term that is new is the term members' equity. Remember, we don't have an owner now, but we have members, the members of the club. So a business without a profit motive does not have a specific owner. The members represent the owners of the business, and the term members' equity is used instead of owner's equity. Where the accounting equation of a trading business contains a component for owner's equity, it is replaced by members' equity in a non-profit enterprise. The administration of a club is normally handled by a committee. The committee is elected at the annual general meeting, which we also, the abbreviation for that is AGM, and may consist of the following office bearers, in other words, people that are elected to be on that committee. We get a chairman, we get a vice chairman, we get a secretary, and we get a treasurer, and the treasurer will handle the bookkeeping and has to submit annual audited statements to the members. And then we have additional members. That's now the people on the committee. Okay, the constitution of a club determines the business, management, and control of that specific club. That is the constitution. So each club must have a constitution which will determine all those, the business, the management, and control of that club. Okay, let's do ledger accounts unique to clubs. The entry in those accounts that are, or transactions that are unique to clubs. Okay, the first one is entrance fees. Entrance fees. Some clubs require new members to pay entrance fees as well as membership fees. In other words, if you join a club, some of the clubs will require for you, when you join the club, to pay entrance fees for the moment that you join that club. And then after that, you will be required to pay membership fees. So an entrance fee is normally paid only once when the club or the member joins the club. Okay, entrance fees is obviously an income for the club. So that as an income account, we are going to credit that entrance fees, and we are going to debit bank. Debit bank is an asset, so which increases. So we're going to debit bank and credit our entrance fees, which is a nominal account, and it's an income, so that is why we credit the entrance fees. In this example, I have here, it says Green Bean Sports Club received 1,000 from a new member as entrance fees. The Constitution determines that entrance fees should be recorded as current income. Okay, so that is what I just said. What is the double entry in the ledger? We debit bank and we credit entrance fees. Bank is an asset that increases, and then income will increase. Like in the case of a trading organization, an income increases your owner's equity. In this case, it will increase your members' equity. So in this case, it is 1,000 Rand. Okay. Let's get the second example. Green Bean Sports Club received 1,000 Rand from a new member as entrance fees. The Constitution determines that entrance fees should be capitalized on receipt of the money. If you see that words capitalized, it means that we can't take that as an income. All right. We are going to enter that directly into our accumulated fund account. Okay. So what is the double entry in this case? Debit bank, because we receive the money, and we're going to credit accumulated fund account. Like this is more or less the same as with owner's equity, you know, where the owner starts a business and deposit the money in the bank account. Then what we normally do is we debit bank, credit capital. You remember that. Now in this case, it's exactly the same thing. It was in the Constitution, it was determined or specified that entrance fees will be capitalized. All right, so in that case, you can see it as the same transaction as the capital contribution by the owner. You are going to debit bank, which is an asset, and you're going to credit accumulated fund, which is a membership fee, membership equity account. All right. In the example, it was indicated that the entrance fee should be capitalized on receipt, and therefore the accumulated fund was credited. In other instances, the entrance fees account is credited at first, like in the first example that I gave you, and it is only transferred to the accumulated fund account at the end of the financial period. Okay. Sometimes it is indicated by means of an adjustment that a certain portion of the entrance fees should be capitalized and the rest entered as in current income. That just means that the part that can be used as in current income can be used to cover expenses. Okay. In that case, 2 entries are made on the debit side of the entrance fees account. Remember that when we received the entrance fees during the year, we debited bank and we credited entrance fees. Okay, so now we are going to make 2 entries on the debit side, sort of to take out the money out of the entrance fees account. So the one entry, so the one part that must be capitalized, we're going to transfer that to the accumulated fund account. So we're going to debit entrance fees with that amount, and we're going the contra entry is accumulated fund, and the part that can be transferred, that can be used to cover the expenses, in other words, that can be used as an income, we are going to transfer that amount to the income and expenditure account. In the case of non-profit organizations, we don't call that account the account in which we calculate the profit. We don't call it profit and loss account. We call it income and expenditure account. And remember, we are going to calculate not the profit, but we're going to calculate either a surplus or a deficit. Not a profit or a loss, a surplus or a deficit. Okay, a second account that is unique to clubs is the membership fees account. All right. The income of a non-profit enterprise consists mainly of membership fees paid to the club. The membership fees may be paid annually, quarterly, or monthly. The amount that a member has to pay for membership fees is decided annually. Normally, that is decided at the AGM. Okay, let's get the transaction example for the transaction. Green Bean Sports Club received 5,000 Rand for membership fees from members. Okay, that is plain straightforward. Debit bank with 5,000 because it's an asset that increases, and we credit membership fees account, which is an income account, so it is a nominal account. So we're going to credit membership fees with the 5,000. In many instances, clubs like affiliate with a bigger organization, or like, let's say, a national organization or a regional organization. In that case, the club has to pay affiliation fees to that body to whom they belong. Okay, so we call that affiliation fees, and that is also a new term that we haven't had before. Okay, so let's do the example. Green Bean Sports Club paid the annual affiliation fees of R1,000 by check to the National Sports Union. They paid to the National Sports Union for their affiliation fees. Quite easy, very easy. Credit bank, which is an asset that decreases. So we credit bank with R1,000 and we debit affiliation fees, which is a nominal account and an expense. So we debit affiliation fees with R1,000. Another type or another account that is unique to non-profit organizations or to clubs is honorariums. Okay, what is an honorarium? The committee of a club do not normally receive payment for their services. Okay, however, a small amount is usually given to the secretary or the treasurer just as a token of appreciation for the services that they render. Okay, so that is why we don't work with a salary and wages account. We call that account honorarium, and that is, as I've said, it's not like a salary or wages. It is just like a small token of appreciation that is normally paid to the treasurer or to the secretary for the work that they are doing or for their services that they are rendering, okay, to the club. So the example that we have here is Green Bean Sports Clubs sent a check to the secretary as honorarium, R4,000. They could also say here, Green Bean Sports Club did an EFT, electronic funds transfer, to the secretary to pay the honorarium, R4,000. Okay, so what is the double entry? Because we pay money, we credit bank R4,000 and debit honorarium, which is also a normal expense. So we debit honorarium, 4,000, and credit bank. Bank is an asset that decreases, therefore assets decreases, and honorarium is an expense that decreases the membership equity. Okay. Donations received are normally considered as current income and closed off to the income and expenditure account. That is the normal situation. In other words, you can normally use that as an income to cover the expenses. Okay, but when special donations and legacies are received from a member's estate by a club, the donor may stipulate that the money can be utilized for a specific purpose, or that a fund be created from the proceeds, and that the proceeds of the fund investment are used for a specific purpose. Bequests and donations for special funds, the interest on the fund investment, and the appropriation of the fund and the interest are normally capital receipts and payments, and do normally not appear in the income and expenditure account, like all the other income and expenses. There has to be a separate fund investment account for a special fund, and the balance will always be the same. And the balances will always be the same for the fund and for the investment. Okay, but we will get to that in the next lesson.